This is not just the only way that you are going to get funded, but it's going to allow you to keep your account and scale your account, and overall be able to trade consistently long term. Hello, my name is Jay Froneman, and I am the founder of Funded. Not only have I helped my traders get funded for the first time, but I've also helped them achieve their first ever profit splits. And do exactly that, not just getting funded for that glorious, flashy, shiny certificate, but actually being able to keep that account and consistently maintain their payouts by implementing this exact tweak that I'm about to show you. Before we get started, big credit to Photon Trading for the idea of this video. I will leave a link to his YouTube channel in the description of this video. As most of you may know, I am predominantly a Photon, Mentfx, and a little bit of ICT concepts trader inside of my trading rules, and that's really the foundation that I come from. So all of my concepts I'm not the founder of, but you don't need to be the founder of something to be profitable. You just need to take what you've learned and develop your own profitable set of rules and systemize that. So that's why you will see a lot of the concepts that I talk about is perhaps similar to that of Photon, Mentfx, or ICT, is because that's where I found my profitable edge in the market. So continuing with this video, I'm assuming you are watching this video because you want to get funded or become somewhat consistently profitable, right? So at the end of the month, when you look back at your strategy, whether that's on your live charts on TradingView or MetaTrader or on a backtesting session on FX Replay or whatever that may be, and you look back at your strategy and you see that it performed really well. It was really profitable and it produced excellent results. But your results are still down here. And you haven't really found consistency with it, and you're not profitable with it, although that your strategy is showing that it works great and is profitable when you look back at it. So what causes this? And that's exactly what I'm going to show you in today's video. Now, don't worry, I'm not going to show you some bullshit psychological advice like, don't worry, bro, just be patient, bro. You will eventually get it, bro. I'm just going to give you this quick hack and a marketing strategy to fix this for you and sell you to my $100,000 one-on-one mentorship. None of that. I'm going to give you something practical that you can apply today and start minimizing that gap between your strategy and your actual performance, and ultimately start making those gains and meeting the performance of your strategy. And also at the end of this video, I'm going to show you a hedging technique that I use to pass challenges risk-free and guaranteed. Yes, the prop firms do allow this. Yes, it is long-term sustainable. This is not something that I promote off the bat in my community because there's absolutely no point in using this to get funded if you don't have the trading skill, because ultimately you're going to be wasting that funded account. It's going to be impossible to get payouts if you don't know how to trade and you don't have those profitable set of rules. So that's essentially going to be the second way that you will learn in this video, how you can pass funding challenges risk-free and guaranteed. In a nutshell, if you fail the challenge, you will learn how you can get refunded your challenge fee so that you never lose money if you fail a challenge. I'm also going to show you how you can use the same tool on a live funded account to get yourself a payout. If it fails that funded account and doesn't get you a payout, it will still bring you back to break even. A very interesting model that I've been busy with for quite a while, and I have now introduced this to Funded, so you will learn this by the end of this video. So long term back, when we've all been there and when I was there and we had that performance discrepancy where we had a really good strategy that works, but we cannot fulfill that discrepancy gap to maintain and keep up with the performance of that strategy, is because I was one of these two traders. Either the loser will be a bit of a bully and just call him loser, and trader number two, we'll call him hindsight. And I was always both back in the day. And I'm sure some of you may be or currently are either the loser or the hindsight. How loser would think is, when he's about to enter a trade, should I buy? Should I sell? Should I hold? And he's indecisive, in doubt on the decision that he should make. Or if you're in a trade, should I hold? Should I get out? Should I pull out early? Should I rather just set my stop loss to break even to play it safe? And then afterwards, once price action has actually played out, I would be hindsight. And then I would be like, oh, damn, I should have bought. Why didn't I buy? Or I should have sold. Why did I buy instead of sell? Or I should have held. I shouldn't have pulled out early. Or I shouldn't have set break even early because now I got stopped out at break even and the trade went my way. And all of these thoughts run through your head. You start blaming yourself. You start wondering, why am I an idiot? Why the heck did I do that? And when you're busy trading and going back and forth between that loser trader before your trade and your hindsight trader or man after your trade, is when you constantly swing back and forth between these two types of traders. The one trader that is always indecisive, doesn't know what he should do, and then after that trade, he becomes regretful because he perhaps made the wrong decision. He bought when price sold, or he sold when price bought, or he pulled out early when he should have held his trade, or he set his stop loss to break even when he shouldn't have, and he got stopped out at break even, and then price ran his way, and then he's feeling these constant emotions of regret. So how do we get out of this and stop ourselves from fluctuating between these two different people or these two different poles? We want to be bang at the top right here, where we are centered and have a clear decision, clear objectivity. We want to get rid of swaying in between these two people or two emotions. And where these two types of people are, the loser and the hindsight, or the indecisive guy and the regret guy, is where the 90% of the masses are, where most people that try to start trading, or that perhaps even have been trading for a while but aren't yet profitable. And I've seen this before firsthand. A lot of members that have come to me to look for help in MM Funded are these types of traders. Their technical analysis side is on point. They have a profitable strategy, they have a working system, but there's a large gap and discrepancy gap between the actual performance of their strategy and their true results that is not showing what that strategy is reflecting. And that's where 90% of these masses are currently lying. But the masters, what are they doing? They are at the top, winning 10%, because they are extremely objective. They don't have any of these ums and ahs and doubts. Should I buy? Should I sell? Should have I held? Or damn, I should have bought. They are very objective and decisive on how they execute their trades. They always know that they've made the right decision. They follow and they always know exactly what they need to do. And they always have this clear clarity, right? You don't want to be a hindsight trader for the rest of your life. It's fine. I'll get it next week or the next month or the month after that. Don't keep swinging that way, because you're just going to keep going back and forth between loser and hindsight, and you're never going to end up getting it right by doing it that way. If you want that unwavering certainty when you approach the markets every day, and when I say unwavering certainty, I don't mean that you are going to win every single trade. That just means you have that unwavering certainty on making the right, clear decisions. How do you get that? How can you be 100% certain that you are always making the correct decision ahead of time? All right, none of those hindsight stuff, none of those I should have entered or I should have sold or bought. How do you eliminate that and make that correct decision ahead of time? Well, there are two types of trading strategies. And the first way to solve yourself from swinging back and forth between loser and hindsight is to identify which trader you are. Firstly, we have a discretionary trader who has a very discretionary system. This is mostly 100% decision-based trading. So this is where the trader decides which trades to take based on their own judgment and current market conditions. This goes from the moment of looking at the charts all the way from your higher time frame to your whatever lower time frame you're on to the point where you execute your trades, and executing those trades based on your own judgment and your own decision. And between that process of going from your full top-down analysis, there is a lot of decisions that you have to make in between, right? And the problem with this is it's going to be very discretionary. There's going to be a lot of question marks and uncertainty in this top-down analysis period. Maybe you kind of know what you're doing. You have a little bit of a style and a strategy going, but sometimes you do it that way. Sometimes you use the 4-hour time frame. The next time you use the 1-hour time frame. And then perhaps today, okay, I'm just going to get in and out today. I'm going to trade the 5-minute time frame. Or I'm going away for a week, and this week I'm only going to trade the higher time frame 4-hour or daily and hold swing trades. Sometimes you're going to use the EMA. Today I'm going to use the support resistance zone. Tomorrow I see this trend line. I'm going to use this trend line. Okay, next week I see the supply zone forming. I'm going to look to sell off the supply. It's too discretionary, and it's going to leave too many questions in between, which is going to creep in a lot of self-doubt, indecision. So if you can replace all of those questions and uncertainty and those uncertain decisions that you have in that process with more disciplined and objective criteria, you are going to drastically reduce all of that uncertainty and that regret. And that leads to our second type of trader, a mechanical trader who is a rule-based trader. So now, instead of topping down your analysis with your own decisions, your own thought process, your various different criteria that changes all the time, that leaves a lot of uncertainty, this is now a trading system that will decide for you on what trades to take regardless of the current market conditions. If this happens, you do this. If this happens, you do this. There's no if, buts, and maybes. There's no uncertainty. There's no impulsive decision-making or uncertainty. It's literally like a flow diagram where only one of two things are going to happen. Kind of like when you code a program into a computer. It's going to repeat the same set of steps every time that it has been systematically and mechanically coded. It can't think for itself. It can't be uncertain in its decisions. It's not going to regret anything that it does, or it's not going to not know really what to do. It's a fixed set coded rules that will either happen based on a fixed set of criteria. It's either going to do it or it's not. Your system tells you what to do, not your own gut or instinct. So if you think about the market as like a game of Pac-Man, I'm pretty sure most of you have heard that. Well, essentially the market is its own expression of freedom, all right? It can do and you can do whatever you want to do. You can buy, sell on many different time frames with many different strategies, many different indicators. There's limitless decisions and things that you can do in the market. Okay, you can risk 1, 2, 3%. You can trade gold and then Euro USD and then coffee beans and then sugar and then flipping OnlyFans, stock markets, whatever the heck it is. You can do anything with the markets. And there's a million different ways that's up to you to do what you want to do. But this is the problem. For you to get from A to B, being your goals, there's a million different ways that you can go about that with all of these different things that you can do, which makes it so difficult, and there's no clear path on how to do that. There's about a million different ways that you can make $1 million in the market. But what we want to do is to eliminate all of that noise. To get from A to B is to have a clear strategy that takes you on the same path from A to B. And we're only going to take that path and not deviate from that path. So if we go down the path and the next step isn't there, we stop and we don't proceed, because that is not part of your strategy. Because if we do anything else that doesn't allow us to do that, to get from A to B, for example, we get halfway here and those rules or that strategy doesn't play out, we stop. We don't go off the path sideways or a little bit backwards or this way or that way or this way or that way, because that's not following our strategy. That's not going to get us from A to B. Because now, if we compare this to discretionary traders, somebody who's got a little bit of a style, who maybe has a little bit of footing in the ground on how to get from A to B, but just aren't quite getting there yet because they don't have any clear path on how to get there. Sometimes they trade this way, maybe the next day they're seeing a specific pattern form that they want to get in of. Maybe the next day there's this beautiful resistant line where they're looking to anticipate longs, and they're completely doing a million different things. And they start zigzagging, maybe getting a little bit forward, then going backwards again, a little bit more forward, then all the way back to the beginning, a little bit more forward, but back again. But they never end up getting to their final destination. And there's a lot of room in here for adjusting things, making different decisions, which is where those aspects of uncertainty and impulsive decision making start to creep in. And when inevitably those traders start taking a couple of losses, how do they know that those losses are just a part of their profitability model, or are they actually just bad trades that they shouldn't have taken? So how are we going to know the difference between these two? Well, as traders, we are trading with something that we call random distribution. That essentially just is a fancy term for we don't know the order or the sequence of the outcome of the wins and the losses in our trading. A quick example over here is if we have a 60% win rate, what we naturally think, right? The fantasy and our thoughts is that we have 6 wins and 4 losses. That's what at first glance, what most people would think. Even I do when I hear somebody that has like a 60% profitability month. They won 6 of their trades and lost 4 of them. It's just the natural wiring of the human mind. But in reality, we have no idea in what order or sequence those wins and losses happened. And this is something that's going to be random, that we can't predict. You know, sometimes you might have 2 or 3 losses in a row, then maybe 3 or 4 wins, then 1 loss, 2 wins, then 2 losses, 1 win, then another 1 loss and 3 wins, or then 3 losses and then 1 win. There's never going to be a fixed order in what and how that outcome is going to be. And that is something that is never going to be predictable. That's why we call it random distribution. And this concept of random distribution is what twists so many people's minds. Because as we know, the outcome of a large number of trades that we have taken should be close to the expected value, not the exact. So what I'm saying is here, if we have a 60% win rate, it doesn't mean that we are going to have 6 wins and 4 losses. Maybe over the period of 153 trades, we have like 72 wins in no particular order, but 45 losses, even if it doesn't add up. I'm just putting the example together here. In no particular sequence, it should somewhat equal close to the expected value of 60%. Okay, so one little mindset thing that I am going to talk about, I know I said I wouldn't talk about it at the start, is that consistently profitable traders have 2 layers of beliefs that will contradict each other, and we need to have them both. And the first one is having that more of a micro level on a smaller level where you have complete uncertainty and no predictability and unpredictability of an individual trade. So that micro level focuses on that one specific trade at that particular point in time where there's complete uncertainty, there's no predictability, and you have no idea if you know that's going to be a winning or a losing trade because of the random distribution that we just spoke about. But on the bigger macro level, right, there is relative certainty and predictability of the longer term, larger series of trades that you'll be taking. And profitable traders are the ones that are holding on to both of these contradicting beliefs. But in the long term of things, we know that it is certain, it's predictable, and it's consistent. And that's exactly why you do not need to know what's going to happen next in your current trade now to be consistently profitable. Happy day is fine. Okay, that means if we take a loss, it's fine. We think, okay, this is fine. It's just a part of the long-term certainty and the long-term consistent results. But this is the thing. If you have this discretionary style of trading and you're taking losses, you're not going to have any idea of certainty and predictability on the macro level as well. So when your macro and your micro is both uncertain and both unpredictable, you're never going to get from that point A to point B, and you're never going to reach any level of consistency and profitability. And that's where traders aren't so sure, and why a lot of people end up never getting profitable is because they don't know how to get out of that loop of never getting from A to B and just kind of bouncing back and forth halfway the whole time, because there's too many discretion, there's too many indecision, there's too many impulsive decisions, which leads to making too many mistakes, which is stopping you from getting from that point A to point B in that one particular line. You need to eliminate this variable that's in you, that 100% discretionary way of trading, where all of your indecision is, where all of your regret is. You need to eliminate that variable. And the only way to do that is to have those exact decisions where there will only be a certain criteria and a certain outcome. Because then you can go back and manage and have a look. Did you do everything according to the rule book, according to my rules, according to my discipline? You know, and did you do it the right way? Because now you're eliminating all of that room for margin of error. So just to put this more in a bit of a simpler perspective to understand, we've got our 2 types of traders, our discretionary trader and our mechanical trader. Both of them initially take 4 losses for -1% each. So by the end of these 4 trades, both traders are 4% down. So the mechanical guy, right, he doesn't worry. He takes his next trade, it's a winner, and he makes 5%. The mechanical guy on his 5th trade doesn't worry. He's following his rules, he's following his discipline. That straight line from A to B, he executes his trade based on that clear decision. and he makes 5%, right? He's executed confidently with clarity and certainty because he's followed his rules. There's no uncertainty, there's no fear, and there's no hesitation. He just executes, right? Because it's the right decision, it's the right thing. He is consistently profitable with his rules. That allows him to take those consistent actions. But now the discretionary person is, because they're 4% in loss, they're doubting, they're hesitating, they're not too sure because they don't want that fifth one to be a loss. And what ends up happening is, because they hesitated, they just left that trade. They skipped it, they didn't hop into it, and they missed that particular trade. Because they don't know if they've made the right decision, they're hesitating, and then only after that trade has played out, they're now sitting with all of that regret, bouncing back and forth between those two traders, the loser and the hesitator, and they stuck in between that loop. And like I just said, they see this trade has played out, the strategy's played out. Why the heck didn't I execute? So then they get a little bit more confident because they see this trade worked out, and they go and take the next trade and they make a 2% gain. The mechanical guy as well, executing on the same set of rules, following his discipline, his sixth trade, he also makes 2%. But the difference is he's not executing now because he's all excited, pumped up because the previous trade worked. He's executing on certainty, on clarity, on his rules, that singular line, that singular path from A to B. And he also makes 2%. But now, by the end of the sequence, that random distribution, and just because that discretionary trader let his uncertainty, fear get involved, he missed out on that one trade. At the end of that sequence, he's now sitting in a loss at minus 2%. And the mechanical person is on plus 3%. And it's that difference. Well, it makes all the difference over the long run, is that mechanical person is going to continuously take action and executing based on his rules. And he knows this losing period is just a little bit of a down patch, but he knows in the long-term period, he is still confident and consistent and profitable. And the person that has that unclarity, that uncertainty, and has that hesitation is just, again, bouncing back and forth between this A to B model here. He's just bouncing back and forth, not getting to that end point, which in the long term of that, he's just bouncing up and down. Okay, there's no profitability. He's not going up, and he's just making profit, losing, making profit, losing. He's not actually making any money in the long term because of that uncertainty and that doubt and hesitation creeping in, regardless of the fact that he has a profitable strategy. But this is that discrepancy gap between your actual strategy and your true performance. Now, imagine a world where you could trade and actually enjoy your losses. How can that happen? Well, when you realize each time that you take a loss, or when you take a loss, it's just one step closer in that A to B path line over the longer period to your next profitable run. Because we know that one singular loss in that moment is just a part of that random distribution. Now, remember earlier when I was speaking about that loop that those loser and hesitant traders continuously bounce back and forth. Now, before I personally had my consistent set of mechanical rules, this is what that death loop looked like. And this is exactly what I went through for quite a couple of years before finding my consistent edge. All right, what would happen is, for years, I would take a loss, and then because of that loss in that moment, I would kind of now doubt and hesitate about taking my next trade because I don't want that next trade to be a loss. So what I ended up doing was, for some days, I'd sit out and I would just say, okay, I'm going to continue trading next week. I've taken a loss this week, and then what do? I end up skipping on trades. And then by the end of that week, I would go and look back at that week, and I would notice I missed out on about 3 or 4 runners and 3 or 4 profitable trades. So I missed out on all of those winners, which then the following week I would think, okay, so the system must work. Yes, I took a loss, but the other 3 would have won. And then what I do, I go back into that next week and I start revenge trading confidently because I saw all of the winners that I missed out on. And because now I'm revenge trading, again, on uncertainty and doubt and hesitation, I end up taking more losses. And what ends up happening? You end up stuck in that loop where I mentioned earlier, we bounce back and forth. Here's A, here's B, but we're getting halfway and just bouncing back and forth. And that's because of this loop that you are continuously stuck inside. And there are traders that get stuck in this for years. And unfortunately, they never get out of it. And because they perhaps don't know how to, or they don't know how to start to avoid this loop, and they probably don't even know that they're in this death loop. Okay? And that's why a lot of traders end up giving up, is purely because of this death loop and this exact reason. Maybe you've been here before and you're not trading anymore, but you're watching today's video. Well, here's your reason why that you gave up trading, is because you were stuck in this loop. So how do we do this? How do we correct this? Well, this is exactly why I am here today. And you can change this. You can change this by implementing a mechanical framework, a proven defined edge through a set of rules. So what do I mean by this? And why do people never get out of this loop? Is because by not having those proven defined edge and set of rules is the root cause of most traders' problems. Those problems being doubt and hesitation, skipping trades, missing winners, revenge trading. The things that we discussed in the psychology video before this one in lesson 7. I'm going to put it to you in this perspective, and I'm going to ask you this. Would you play poker if you could not see your cards? You know, would you put those chips on the table, or your money and that hard-earned money that you've worked for in that month, and put that down on the table, bet it and risk it all without even knowing what cards you're holding? Well, traders are betting on hands that they don't even know what cards they are holding. Traders are literally taking trades and setups without having any idea of what their proven edge is. What are your numbers? What is your strike rate? What is your profit expectancy? All right, you have no idea. So of course, if you have no idea what you're betting on, your emotions are going to be through the roof, and you're going to be so inconsistent on your decision making. All right, so discretionary trading is so tough on your psychology. It's going to be impossible to master your psychology that we spoke about in the previous lesson if you are that discretionary trader. It's very easy to second guess your decisions and deviate off that strict path line, where that will end up stopping you, your second guess decisions, from getting from A to B. And it's going to be very hard to accurately backtest and journal, to accurately collect hardcore proven data that proves your edge, that long-term consistency. And without that, that is what's going to continuously keep you in that death loop. Because remember, when you're trying to do this at scale with really big money, maybe hundreds of thousands and millions of dollars of funding portfolio, or even larger investor capital, where you're trading for corporate companies on a professional level, there is no ways that you can second guess decisions. It's going to be impossible to manage your psychology. You cannot be betting on that type of money when you don't even know what cards you're holding. It's going to be impossible to be profitable. And then thirdly, because now you're still a discretionary trader, you're second guessing decisions, you haven't really got good psychology, it's very easy to cheat yourself out of your backtesting sessions, because this particular trade looks good. We're on TradingView. We fast forward a bit. We get that reaction of that zone. We then go back and then put our trade there anyway, then document it. That is not going to be a reflection at all of your results when you're live trading, because subconsciously, and you know it when you go to the live market, you don't really have that proven edge, those proven results and data that proves your long-term sustainability and consistency and profitability. The path to success in trading is simple, but it's not easy. Okay, so as we've been discussing, we need to have that mechanical framework that we can repeatedly and consistently execute, because those consistent actions is vital for consistent results. Then once you have that mechanical strategy, you can then start to prove your edge through backtesting and forward testing. Instead of your emotions and your indecisions, your second thoughts decide your edge, you now have hardcore, cold, proven data that proves your edge, which is going to give you all of the confidence in the world to now approach the live markets. It's going to give you that bulletproof mindset, and it's going to skyrocket your psychology, because now you know you're going to have trades that you are definitely going to take, and you know there are going to be trades that you're not going to execute because you have that proven edge, you have those rules. Whereas there's no umming and ahhing, should I take this trade, shouldn't I take this trade? And it's going to eliminate that uncertainty, that doubt, that inconsistency in your decision-making process. And like I said, when you have that data that you trust and that's proven, it will make a monumental difference to your psychology. And once your psychology is in place, because now you have that proven edge through those mechanical rules, that is what's going to deliver you those consistent results and those consistent returns. Because like I said, now you have these consistent actions, you now have those consistent results. What does consistent results mean? That means you can now become sustainable. You can consistently manage live accounts and consistently get yourself payouts and be profitable. Okay, you've cracked the code. You're making payouts. You can now scale. Get from 10 to 20K accounts to now 100, 200K accounts, and actually start building a really good quality track record for yourself, which are things that can go on your CV. It goes on your resume. And those type of things can allow you, even in the longer run, to operate on a professional level, where you start approaching investor capital, corporate and conventional businesses, which can lead to a full-blown trading and investing firm that is FSCA approved, which, boom, rocket emoji, skyrocket to the moon. But are you starting to see that your goals of trading are up here? Sustainability, profitability, right? You want to make money and scale and make more money. Okay? But none of this can exist without any of this. But in order to get this, you need to put 100% of your focus into this. These first four things, your skill set. Because without that, you're not going to get there. And so many traders want this overnight magic system. They want to copy live stream trades and copy signals to get here, when in reality and in the long term, that's impossible because they haven't put this in place. Are you seriously on $1 million funding account going to be copying signals and other people's trades that you have no idea that works, that you have no idea delivers consistent results, you have no idea is a proven edge? Are you going to go and risk that 100K or $1 million funding on other people's cards that you can't even see? Do you understand the exact reason why here at Funded, I don't promote or focus on live trading or signals? I've done it before, I've been through that space, and I've helped a lot of people make money with it. But one thing I was seeing when I was in this learning phase, that long term, it's impossible to rely on that sort of thing. And this is why. Because let's say over the period of a month, I take 10 trades, I post 10 signals, okay? 7 of them are wins. Maybe we get all 7 of them in a row, whatever's sake. Now, those last 3 trades that were losses, let's say the majority of the people or the viewers that didn't take my first 7 trades now took my last 3 trades. While they sitting in a 3% loss, I'm 7% up. So that's where that discrepancy and gap in that data is always going to be different in the long run when you're doing signals. It's never going to be the same, and therefore impossible to be consistent. So let's look at it like this, okay? In all seriousness, if you were given $1 million today, and this is the only money you're ever going to be given, it's your only and last chance, are you ready to trade it? But I mean, truly, deep down, honest, are you ready to trade it? And what I mean by this is would you 100% be confident in risking $10,000, which is just 1% of the account, on the next trade with your current strategy? Probably, I'm not going to say all of you, but probably a lot of you wouldn't. And that's because you will never be able to scale until you have that extreme confidence and clarity in your proven edge. And this is hard reality. If you really want to scale, I'm talking about big numbers, going beyond $1 million, 10 million, 50 million, where the guys at Wall Street are. If you really want to get to that level, you got to be thinking big, and you have to imagine trading those numbers. Are you going to be able to do that with extreme confidence and clarity, which is what is required to trade at that level? Even if you're trading those funding challenges, maybe you've got friends, family that's down your back that needs money, and you've got pressure on you now before you even at that huge professional scale level. All right, you need that clarity in your proven edge. So look, if you want those consistent results, you just have to be consistent in what you can control. All right, I don't think many of us or most of us that are watching this are quite yet at that size and scaled level of hundreds of thousands and millions of dollars of accounts where we can literally move and influence and manipulate the market. Would be pretty sick and nice to do that one day. Okay, that could be the goal. Maybe you get there 5 years time, you've got that record, you've got that proven edge, and you get into Wall Street, then you are one of those big guys that moves the markets. But in order to get to that level, we have to be consistent in what we can control, which is our execution, our decisions, and our rules, those things that we can control. We just need to be a slave to our strategy. Okay, if our system tells us to execute, we execute. If our system tells us to stay out, we stay out. Okay, so you don't need to try and predict the market because it's impossible to predict the future. Okay, you just need to try be in the markets every time a high probability trade setup by your plan and your edge and rules is provided to you. So how exactly can you make your trade plan mechanical? Well, that's exactly what I've taught you so far in this 7-day bootcamp, which is going to lead to me finalizing this bootcamp with a little bit off-topic strategy that I use to pass my funding challenges, risk-free and guaranteed. And this is a service that you guys will have the opportunity to today. Okay, so to essentially break this down, I'm going to put here, let's say for the sake of this example, we have now taken 100K phase 1 challenge. Okay, we need 8% to pass. 8% to pass. And this challenge costed us $500 to buy. Okay, so by buying this 100K challenge, we are now $500 down. Now, the model that I'm going to use here is essentially if you fail this challenge, you will get refunded this $500 fee. But there is a catch to this because your money needs to work against your money in order to do this and in order to guarantee this. Okay, so what we need to do is, and what I do is, I take that same $500. So now I've spent $500 on the 100K challenge. I need to take another $500. So that's now a total of $1,000. So here we have another $500. We're going to put this in a personal private broker account, in a private account. Okay, so that's our own little $500 account. I've then got a hedging tool, which I load up onto the 100K challenge and load up onto the $500 account, where they then are connected, such as this. They're connected together, okay? There's going to be two possible outcomes. Outcome 1, you're going to get 100K funded, okay? Hooray, we funded. Awesome stuff. We have our live account. But that also means we're going to lose. I'm going to put you in a separate text. We're going to lose, or we've lost, our $500 personal account. Because let's say on this particular tool, its trade plan for the day was to buy. It's going to attempt to achieve that 8% target to pass in one trade. Let's say we took a long on that tool. The tool takes a long, it's automated, and it buys on this account, and we win that trade. Okay, so we've now made that 108K on the evaluation account, which now equals that 100K funded account. Okay, hooray. But at the same time, this account was hedged against the funded challenge. But, so therefore, we've lost that $500, okay? We've lost that 500 here. But also remember, on your payout phase, you get refunded your challenge fee. So you get that $500 back. So therefore, our initial investment of $1,000, the $500 to pass phase 1, and our $500 in our private account leaves us with a 100K account and minus $500 down. Okay, so that's scenario 1. We're going to get 100K funded and $500 in the red. The second scenario is, if we, that same trade, the long position, for example, to pass this 100K phase 1 challenge to get 8% up, let's say we fail it. We hit max drawdown and we've now hit 95K. Okay, we've failed that account. What's going to happen is this $500 personal account is exactly calculated every time to double to $1,000. So what this means is, okay, we failed our challenge, but we made our $500 back. So we break even. And these are the two scenarios I use to get funded every time. Is either I'm going to get funded and my challenge fee back, or I'm going to fail it and just get refunded anyway. But this is the cool part. You can repeat this on a live account. Okay, so let's take our 100K funded account, our live. Okay, remember, we are now $500 in the red. So that means in order to break even, we need to make that $500 back. So again, we need to take another $500, put that into another personal account. And this is what this tool is going to do. It's going to try make 5% on your live account. And here are your two scenarios. Okay, one is either going to be you're going to make 105K profit. So that's 5K profit that you're going to get withdrawal. Okay, and you lose this $500 account. So I'm just going to put here $500, and we've lost that account for scenario one. Okay, but now 105K minus our $500 minus a 20% split to the prop firm is about $3,800 profit payout that you're going to get. There's your payout. Okay, so that's scenario one. Scenario two is you're going to fail this 100K account. Your $500 account is going to double to $1,000. So yes, we've lost our funded account, but remember, we're still at break even, way up here, because this is now doubled. Our expense to buy this account has doubled again. So we're back at break even. So this is the model that I use to continuously get funded and essentially without any risk. The only difference is when I'm funded, I trade with my consistent set of rules because I like to go for more consistent returns than that on a monthly basis. But the reason why I didn't throw this in the beginning of the course is because this model is not going to work on your live account if you don't know how to trade. Yes, okay, you can go for a payout by using this service with me. And by the way, I will manage this entire account for you. Where I will take my profit from you is I'm just going to take, if I get you a payout, because remember, you're not doing a thing to get this payout. You're doing nothing. I'm doing the work. I will keep 40% of this payout. So you will get, let's say, 2,200. I will keep, let's say, 1,000. What's that? 600 for myself as the service fee. So you're making $2,200 completely for free. Or your worst case scenario is you're going to be break even. You're going to get refunded everything. This is the model that I am now officially launching to Funded. So if you guys want to apply for this, now this is going to be involved with a package that I've recently launched to Funded this week. So all of the course content, the rules, is now moved into a one-on-one mentorship. This one-on-one mentorship is very exclusive, tailor-made and personalized for you as a trader, where you will get my personal WhatsApp number. We will define your set of rules, prove your edge, and from there, I will forward test with you, back test with you, and live trade with you on a challenge account until to the point where you are consistently profitable over the long term. Whether it takes you a month, 2 months, 3 months, 5 months, 6 months, a year, I will be there in your pocket. On WhatsApp, you get my personal WhatsApp number. So if you're about to hop onto a trade and you want to go through your rules and your emotions and your process, you call me and we hop on call together. So I will be there holding your hand throughout the entire process. And what this is going to do is it's going to fast track your learning curve, and it's going to allow you to get consistently profitable because now you're not going in at it alone. Okay? So if you guys want to apply for this one-on-one mentorship, I will leave a link below this video, and also it's in the Discord server. But right below this on this web page, you will see a link. There will be a form and then a little calendar where you can book a free 30-minute one-on-one onboarding call with me, where I can just get to know you a bit better and know how to structure this mentorship with you. So yeah, that will be my only promotion for this course. So you can click that link down below, and I'll see you in the first 30 minutes onboarding call. Take care, guys. See you in the next one.